The latest Swiss asset management study shows that assets under management in Switzerland grew by over 10% in 2020 to a record 2.79 trillion Swiss francs. What makes Switzerland an attractive place for asset management? Today I'm speaking with Christelle Randu-Dolint, who is a Deputy Head of Investments and member of the Global Executive Board at Vontobel, to find out more. Christelle, what's the market share of the Swiss asset management industry compared to other regions?
So Switzerland ranks fourth in Europe, behind the UK, France and Germany, with a market share of slightly less than 10%. And Europe as a whole is about 25% of assets managed worldwide.
And how many of the assets under management are actually allocated into traditional versus alternative asset managers?
So interestingly, the lion's share still goes to traditional assets, right? So if you define that quite restrictively in a sense, with bonds, equities and multi-assets, you have about 3/4 of the assets that go to these categories, which we could call traditional. And then the other quarter is alternative assets.
And what about the key players?
So the key players are first the largest bank in Switzerland, so UBS, Credit Suisse, then you have Swisscanto, Pictet Asset Management, and then you find Partners Group and Vontobel.
Where you're working.
Yeah, absolutely.
So there are three trends in the asset management industry: growth of passive investing, big data in the investment process, and robo-advisors in wealth management. Can you elaborate a little bit on the current state of these trends in Switzerland?
Yeah, so passive investment is a trend that is well established worldwide as well as in Switzerland. If you look globally, passive assets have been growing about twice the rate from active assets, meaning that they're gaining market share. So in Switzerland, we've gone for about 25% passive investment in 2017 to now slightly over 30%. So that is a well-established and observable trend. Big data and machine learning, I think, is really an opportunity for Switzerland. Digitalization in a broader sense is one priority that we've identified at the Asset Management Association, for instance. And I think it presents a lot of possibility to leverage and enhance investment processes. You can, for instance, test your investment beliefs, right? If you believe that, for one reason or the other, this type of approach will outperform another type of approach, machine learning and big data gives you the opportunity to test it and have it as an ongoing test. It gives you the opportunity to make more educated analysis, because we know that machines are better at analyzing a lot of data as opposed to the human brain. So it's not one versus the other. It's really one to the service of the other. But I think we have a lot of opportunities on this front in Switzerland. And we also have talents here, right? We have big technical universities that are worldwide renowned. In terms of robo-advisory, there again an opportunity. I think it's still in its infancy. What we observe is that we're still very much either a physical advisor or it's 100% digital. And yet studies show that probably the target audience would like something hybrid, where you can, if you want, do everything digital, but you can also have access to an advisor to ask questions, etc.
So combining.
Correct. So definitely opportunities for Switzerland there. And I would actually point to a last trend and opportunities, which figures also very highly for us at the Asset Management Association, which is sustainability. So right now we see strong demand with 25% of net new money going to sustainable or ethical solutions, whereby only 5% of the assets at the moment are ethical or sustainable. So we really have that ratio 1 to 5, which tells you this is a trend that is really worth looking at.
So there's a lot of work for you actually to look into what is happening in the future.
Absolutely.
So on a global scale, do you see the share of assets under management in active management declining? You actually just mentioned that. Is it because of the difficulty of generating ex ante alpha?
I think it's not that. I think there's an aspect of cost, there is an aspect of convenience, transparency, because when you look, the passive investments are not represented in the same fashion across segments. So take the US stock market, which is the broadest, deepest, and allegedly most liquid market in the world. There you have 50% that are invested passively. If you take high yield, for instance, you go down to 13%. And indeed, you can question whether it is as optimal in high yield as you could think it to be for a market like US stocks. So the trend would extend very strongly if all portfolios were only US stocks, but they are not, by far not, and by region not. And then if you think about alternative assets, private markets inherently cannot be invested passively. And even in terms of performance, when you look at ETFs, they tend to rank second to third quartile over 5 to 3 years, so in the bottom half. So you really do find a lot of active managers who outperform passive, but it's about finding them, right? Having the access to this information. And I think with digitalization, you might actually give more access also to investors to make those informed decisions. So I definitely think the both will continue to coexist because they fill different needs, and it depends on where and what you want to invest in.
Then you already mentioned a little bit what are the advantages of being in Switzerland. However, how do the offerings of the Swiss asset management industry differentiate from other locations?
Well, look, I think this is key actually to be present in that game, is to differentiate. And so either you can differentiate with a type of product, a type of approach, or a type of distribution channel, or if you cannot differentiate and if you mainstream, which works as well, you have to differentiate with performance and investment excellence. Asset management is inherently actually quite a transparent industry. You have access to performance data on a daily basis. But we have all reasons, to be there in Switzerland. We can see that we are a strong market. We have access to talents. So we have our cards in this game for sure.
Great. Well, I wish you all the best working on these trends and the future of asset management in Switzerland. Thank you very much.
Thank you very much, Tanya. It's been a pleasure.